The Dow Industrials up 109. Let's get the number. Cheryl Casoni.
All right, we came in lighter than expected, Maria, on non-farm. We came in at 50,000. The street was looking for 60,000. That was the estimate. As you can see, futures ticking up. The rate coming in a little bit lower, 4.4%. We were looking for 4.5%. Private sector payrolls coming in much weaker than expected, 37,000. The estimate there was for 64,000. So as far as labor force participation rate, that was at 62.4%. The average work week actually went just a tick down 0.1% to 34.2 hours. That's a little bit lighter than expected. Government payrolls 13,000. Remember, folks, we don't get an estimate for that, but government payrolls 13,000. And again, as we go through the numbers for average hourly earnings for all workers, we saw basically 0.3%, and that was in line. Overall, this is the story, and what you see in the markets is what we were mentioning earlier, and that is that this goes back to Fed policy. Let me hop into the report really quick and tell you where the jobs were. It's been in healthcare services. It's been in social services, as we've talked about. Let's see what they say. Here we go. Food services and drinking places, they actually saw an uptick there. That trend continued. They mentioned healthcare. They mentioned social assistance. What's interesting is they say that retail trade lost jobs, Maria, in this report. So digging into more of this, sending it back to you for reaction.
All right, look, the jobs numbers are weaker than expected, Steve Moore, but the market is focused on what it will mean for the Federal Reserve and whether or not the Fed is going to actually cut interest rates further. If we had a report that was much better than expected, even though that would be good news, the market may have traded down because of what it means for the Fed. Your analysis, Steve.
Well, possibly. But I think the big story here is, look, you were asking earlier about 5% growth. My God, we just got a report from the Fed Atlanta Bank that says we grew at 5.3% in the fourth quarter. This is an absolutely booming economy right now. Now, the question is, why aren't we creating more jobs? I think the answer is very simple. We have a severe labor shortage in America. We have more jobs available than the qualified skilled workers to fill them. You just ask people who run factories, run stores, run technology centers, they will tell you that. They're having a hard time finding the workers to fill these jobs. But my gosh, we have an economy that is so hot right now. And look, the last three quarters, we had 3.8%, 4.3%. Now it looks like 5.3%. These are very strong numbers. And I expect, as we see oil prices continue to fall, this is just a beautiful picture. Now, yeah, I'm disappointed at this job number. We'd like to see it higher. We got to get more people in the workforce.